Hey everyone, welcome back to Corporate Decoder, the place where we decode the often confusing world of corporate filings. Today we're diving into Edgemode Inc.'s latest amended filing, and let's just say it's a bit of a roller coaster and it looks like they're trying to sweep some things under the rug, but we will uncover it all. This is an amendment, meaning they had to fix some mistakes in their previous report. That's never a great sign. Specifically, they're restating their financial statements for 2023 and 2022. So, what went wrong? The issue revolves around stock options they gave to a consultant. Apparently, these options, which have value, weren't properly accounted for in their previous financial statements, which led to understating operating expenses. Scroll part 2, item 7. Management's discussion said scroll, because of this error, they had to fix a few sections, like the part where management talks about the company's performance, the actual financial numbers, and the parts about internal controls. They also made sure that the top executives have signed off on these new corrected numbers. The restatement is a result of some control issues they had, which is multiple levels of review in the financial close process, along with a lack of well-established policies and procedures to identify, approve, and report related party transactions. Scroll item 7. Management's discussion to scroll. Let's get into how Edgemode is actually doing. Right now, they don't have any real way of making money, and their current business plan is to seek a business combination or a merger with another company. Finding a good company to merge with is hard, so there's no guarantee they'll succeed. Looking at their results, they didn't have any revenue in 2023 compared to almost $440,000 the previous year. The reason for this decrease is that they stopped mining Ethereum in September 2022. Their operating expenses also went way down, which was around $3.4 million compared to $31 million. A big reason for this was a decrease in expenses related to company stocks given as compensation, and they also had decreased loss on cryptocurrencies due to decreased transactions and changes in market prices. They had other income of around $350,000 compared to a loss the previous year. The income was mainly from getting a refund on an equipment deposit. The previous year's loss had to do with a terminated hosting arrangement. They're saying that if they get funding, they expect their expenses to go up as they try to start mining again and look for new business deals. However, it will be hard to predict these increases because they are having a hard time raising funds. As of recently, they only had a few $1,000s in cash. They used to get money from investors, and by selling the crypto they mined to start their mining again and run things for the next year, they are looking to borrow $45 million. But right now, they don't have any available sources for capital. Looking at their cash flow, their operating activities provided around $42,000. Investing activities brought in around $34,000. Their financing activities caused a loss of about $76,000. They got some money by selling promissory notes, which are like IOUs. However, they've defaulted on some of these notes, meaning they haven't been able to pay them back on time. There were some changes in the top management. There's a new CEO and CFO, and both signed the filing certifying that the information is correct, even after all these corrections. Edgemode is not a large company. They're considered a smaller reporting company and aren't a well-known seasoned issuer. The value of the company's stock held by regular investors was about $3.2 million as of June 2023. Recently, in April 2024, they had about 390 million shares of common stock issued and outstanding. The auditors are saying that valuing the derivatives which come from those convertible notes was a tough part of the audit. It's complex and requires a lot of judgment. To value the derivative liabilities, they use valuation models using management's judgment. Looking at their balance sheets as of the end of 2023, they have total assets worth about $20,000. Most of that is in cash and prepaid expenses. They have a lot more liabilities, which is about $3 million. This means their total equity, or what's left over after paying off all debts, is negative, which comes out to about negative $3.1 million. This isn't a great position to be in. Their financial statements show they had no revenue, so the total value of all sales for 2023 and a net loss of about $3 million, or a loss of 1 cent per share. The previous year, the net loss was much higher at $32 million. Now let's talk about potential legal issues. A company called Taylor Blackwealth claimed Edgemode unlawfully terminated their agreement, and therefore they are still entitled to the remaining unvested options. The auditors have serious doubts about Edgemode's ability to continue operating as a going concern. They haven't been making money and they're relying on getting more funding. The company has been selling shares to Alumni Capital LP, but there are limits on how many shares Alumni Capital can buy. Their financial statements have been restated. Generally accepted accounting principles define fair value as the price that would be received to sell an asset or transfer a liability. The company uses level 3, which is prices or valuation techniques requiring inputs that are both significant to the fair value measurement and unobservable to Scroll ASU 2023-07. Segment Reporting Topic 280 CE Scroll. The Financial Accounting Standards Board, or FASB, issued some new accounting rules, but the company doesn't think they'll have a big impact. The stock options granted to a consultant were omitted from its previously issued financial statements. The top executives admit that their system for making sure information is accurate wasn't working well. They also say they had weaknesses in their ability to properly manage and report financial information. So, what's our take on Edgemode? Right now, Edgemode is in a tough spot. They don't have a solid way to make money, and they're heavily relying on finding a good merger partner and also a $45 million loan that is unlikely. Their ability to continue is uncertain. One of the biggest risks is their dependence on these external factors. They need to find a good merger partner and secure funding, and they need to fix these weaknesses in their accounting controls. It's really hard to say what the stock is worth. With all the uncertainty and negative equity, it's tough to put a number on it, but based on their assets and the current loans, I would put it at 1 cent or less. Given these factors, we're leaning towards a slightly bearish outlook for Edgemode. They have a lot of work to do to stabilize their business and improve their financial reporting. Thanks for watching Corporate Decoder. If you found this breakdown helpful, please subscribe for more clear and concise analyses of corporate filings. Stay informed and invest wisely.